Hello, this is Bob Steele. In this video, we will continue on Chapter 5. We are going to Learning Objectives 3 and 4. Learning Objective 3 being to explain the concept of cost levels, including at unit level, batch level, product sustaining level, and facility level. Objective 4, compute product cost under an activity cost system. So if we take a look back here, one slide back before we go forward, we have these different levels here. We have the unit level, meaning those are things that are going to be applied to every unit that we have. So we're going to have a different cost driver. In the batch level, that are going to be things that happen per batch. So they're not going to happen to each unit. They're going to happen per batch. Therefore, when we allocate this big lump sum that we used to be allocating in terms of overhead using one kind of cost driver, now what we're doing is breaking that number up into these different segments in order to come up with more accurate drivers in order to allocate those costs more accurately. So a batch level would be types of activities that the cost is going to be in batches rather than per unit. And then product sustaining level might be something like maintenance the machinery or something like that, which might not happen even every batch, but it happens periodically, and then we're going to have to figure out some way to allocate that number. And facility level being more broad even than that, and would be thinking about how can we allocate the items that are in the facility cost pool. So moving forward then, let's take a look at the first one, which we had the various overhead costs in machinery. So if we took a look at machinery, these are the items in machinery: maintenance, depreciation, computer support, lubrication, electricity, and calibration. That adds up to a cost pool of $1,212,600. And if we take a look at how we allocate that out between our three models, remember what we're trying to do is come up to a price, basically a cost per model, and then a price per model based on that cost, based on marking it up by the 1.25, I believe was the percent that we were marking it up by. So we're going to take up the first we're going to take these total costs and we're going to divide it by the activity base that we decided upon. In this case, we decided on what oftentimes would be a traditional kind of pick for if we were picking an overall activity base. Machine hours and labor hours are often the things that we will pick to try to see how to allocate something between jobs or between processes or between costs. So in this case, that is appropriate when we're talking about the machine costs for the most part, because the machine time would be an appropriate base to allocate out. So we're going to take out that total amount divided by the 43,000 machine hours gives us an hourly rate of 28.2. So $28.20, we can then multiply that out. So Model 1 takes 1 hour per unit, therefore it's $28.20. Model 2 takes 1.25, therefore $28.20 times 1.25 is the $35.25. Model 3, $28.20 times the 2 is the $56.40. So that's how we're going to allocate between the models for the cost assignment for machine. And then we're going to take a look at the setups. So the setup's going to be a little bit different. If we take a look at the setup costs, we're going to say we know that there's $20 per hour for setup. We know that there's 10 hours per setup. Therefore, each setup, when we do these runs, are going to be $200 per setup costs. We know that there's going to be 15 production runs, or that's what we're budgeting to be. Therefore, the setup cost will be $3,000. So we know the setup cost is going to be $3,000, and we're taking a look at run times. So what we're trying to do is you can imagine these models are going through these run times, and the question there is how efficient is the run time. So it costs $200 per run time that we looked at past here. We know it costs $200 per run time, and Model 1 we can run 10,000 units per run. So we know how much it costs per run in this case, and some models are more efficient than other models, or we can produce a higher capacity through one run time. So in this case, we have $200 divided by the 10,000 means that per unit it's only 2 cents per unit in Model 1. Model 2, we know that same runtime, that 200, it costs us 200 to process the runtime. And Model 2, we can only get half as many, or 5,000 units per runtime. So notice Model 1 is much more efficient, or it's less costly to put these to the runtime, because we can put twice as many through on the same $200 runtime, whereas Model 2, it takes us, we can only get 5,000 through for that same $200 runtime. Therefore, it costs us, the allocation then for Model 2 should be twice as much. So we have 4 cents per runtime. And Model 3 is even more high maintenance, less efficient. We have the same $200 runtime, but we can only get 400 units per run on this one. So the per run unit jumps way up to 50% in this case. So these are going to be the high cost ones in this area, because when we're allocating the cost of a particular runtime, we can run far fewer through that runtime. So here's going to be our allocation for the stage 2. And then we got stage 3, various overhead costs related to engineering. So we have the activity pool for engineering salaries, engineering supplies, engineering software, depreciation related to engineering. And that we budgeted that to be $700,000. And the question is, how are we allocating that per unit to the different models, Model 1, Model 2, Model 3. So in this case, for engineering, all we do is we basically go to the engineering department and ask them to come up with an estimate. So we're going to go to the engineering department. We're going to say, give us your best estimate on what the breakout is between Model 1, Model 2, Model 3. And in this case, the engineering department says, based on the analysis that we made, we believe that Model 1 is 25%, Model 2 45%, Model 3 30%. So we're not going to get into how the engineering department came up with those numbers. We're going to assume that they went through a detailed process in order to get those numbers. So we're going to take the 700,000 times 25% and then divide it by the number of units, 10,000 in this case, to bring us to 1750. Model 2, 45% times the 700 divided by the number of units would give us the 1575, and Model 3, 30% times the 700 divided by 400 gives us the 5250. Then we're going to look at various overhead costs related to general operations, the activity pool, plant depreciation, plant management, plant maintenance, property taxes, insurance, security. So this is all the stuff that's really pretty broad kind of stuff. And so that's the facility cost pool. And we came up to 5074. So the 5074, we decided to pick an activity base, in this case, of direct labor hours. So we're going to say, what's the thing that would be most relevant to see how to allocate this pool out? In this case, we chose the direct labor hours, which again is one of the picks that would often be chosen if we were just going to pick one cost pool for all the costs. But in this case, we're going to have different cost pools and different ways of calculating other costs. We think that the direct labor is an appropriate cost pool when we're allocating out the facility costs. Therefore, if we take the 5074 divided by the 118, we come up with $4.30 per unit. So 430 times the 3 hours per unit for Model 1 gives us $12.90. Model 2, 430 times the 4 hours per unit gives us $17.20. Model 3, 430 times $2 hours per unit gives us the $8.60. All right, then we had the final areas, which is the other overhead costs. So we have receiving and inspection costs, we've got material handling costs, we've got quality assurance cost pools, we've got packaging and shipping cost pools. And similar to the engineering, I believe it was, we're going to go to these various departments and ask them what the breakout is. So we have the overhead related to these numbers. We're going to go and ask them, give us an allocation base that you think is appropriate based on your calculations. We're going to multiply that times the number of units to give us our unit cost here. So we did that for each of these pools. Where the key numbers are here that we don't really know. We asked the department for these numbers, and then we multiply them times the units to give us our cost per unit. So, and that comes out to $14.82 if we add the others together. So then if we take a look at these are the new production costs for the ABC, activity-based costing. So we still have direct materials, we still have direct labor, but instead of having one lump sum for overhead, this is the overhead now, allocated in these categories. And so therefore that number is going to be a different allocation based on our more precise allocation of basically the overhead. Objective 5, explain why traditional volume-based costing systems tend to distort production costs. So now we're going to say why we believe that activity-based costing is more efficient in this way. You can see that we come up with a different traditional costing versus activity costing. We come up with different numbers for the cost per model here, obviously. And the difference being through that allocation of the overhead. And if we mark those up, remember, all we're doing for the markup is we're just saying, hey, we have a 25% markup. So we're just going to take this cost, whatever it is, if it was 209 times the 1.25 to get our selling price, and we're going to take the 183 times our 1.25 to give our activity-based costing price. So you notice the price is substantially different here. So activity price costing is much lower in Model 1 than and in Model 2 we have the original being higher than the activity-based costing here. In Model 3, the activity-based costing is actually much higher. And then the question is, well, you know, we could think about why this would be. So we're going to call it distortion. We're going to call this product distortion. Can you identify any problems is likely to face as a result of this distortion? And obviously the problems is going to be that if we were in a marketplace and we were in competition and, you know, we're putting our sales price a lot higher than the Model 1 would be costing at, then we might be completely mispricing our products and not making relevant decisions. So we can see that the traditional costing 209 ABC is, we have a 25% difference. If we were going to carry that out to the units produced, 10,000 units, we can see that there's a substantial distortion here. And so that's going to lead us to make decisions. It could lead us to make decisions in terms of pricing that are not accurate on those, in terms of seeing which models we should produce and all those kinds of questions. So the question is, when will activity-based costing be appropriate? Because to do this is gathering a lot of data, it does a lot of accounting work, and the question would then be, is it worth our time to do that? And in some businesses it would be, and some it wouldn't be, where the things where this distortion would be more prevalent if we did not use activity-based costing would be a large proportion of non-unit level activities. So remember, we said that unit level activities are things that happen for each unit. So if we were trying to allocate all the overhead, and most of the overhead was the type of stuff that's going to affect each unit of production, then we could basically take one base and that would be fine, because that would be fairly good estimate to drive the allocation of the overhead. If, on the other hand, we have these things that are at the batch level, and we have a lot of things that are at the higher levels of the allocation, then we're going to have this distortion that will happen if we just choose this one unit. So a one unit cost driver, such as direct labor, machine hour, or throwout, will not be able to assign the cost of non-unit level activities accurately. All right, so the other type of thing that can distort the traditional method is product diversity. So when the consumption ratios differ widely between activities, no single cost driver will accurately assign the resulting overhead. So these are the two things that we're going to look for when we make the decision, okay, do we really want to put in the extra cost in order to get this more accurate information to make decisions? Is the more accurate information gonna benefit us enough to account for the added cost to acquire it? And so these are the things to consider when making that. And that is it for this one.